Good morning, Predicted Trades family. Hope everyone is doing well. Let's dive on into prep. And let me just say a happy Mother's Day to all the mothers out there. So, on the screen right now, we're looking at ES, and we have the whole month of May in front of us. We actually started May up here at 4,200. Had our little drop to the daily 50 MA, this purple line, and the daily squeeze bottom, right? And then we had our bounce back up. We had our FOMC. We had our FOMC back here. We had our CPI, PPI last week as we chopped around our daily moving averages in the middle of this 4-hour squeeze. We hit the top, fell to the bottom, top, bottom. This happens quite often, especially when we have big economic data like CPI, PPI, right after an FOMC announcement where we dropped down, bounced back. But overall, if you look, we've been in a range, and we're slowly trying to break out of that range. But we have a daily squeeze around us, and we have a 4-hour squeeze that has settled in as we chop at our daily moving averages. Our point of control is also in here, 4136, big key level. 4136 was the low of the year in 2022 for January and February. So it was the support holding us up. And not surprised, personally, after tracking that level for so long, that we're just sitting here at it, right? Now, obviously, last year we set in a much lower low of year, down near 3,500. But over here on this chart is a daily. And as you can see, we've been in a nice, steady uptrend, setting higher lows, higher lows, higher lows. And now we've held up the daily 50 in this bull flag. We're coming up on that 4,200, which has been resistance. Our handy dandy supply and demand tool, which is available for free in the Professor's Indicator channel, has set support at our lows and resistance near the highs from last year, and near the highs from this year. So we are coming up on our resistance. We are coiling tighter and tighter in a bull flag held up by the daily 50. If we zoom in just a little, should this bull flag not be able to get through this resistance and start to roll over and lose support from the daily 50 and these recent lows, then our absolute next target is back down to 4,000, where the daily 200 is slowly creeping up. It was down near 39, 30, and now it's creeping up near that 4,000. So, overall, for the rest of the month, we need to be thinking, we are in consolidation, we are in a flag. By all measure, we are in a quite bullish pattern, and we held up daily moving averages, but they have slowly also started to creep up. And if we just can't get through that resistance, then we need to understand rolling over back to this moving average, sitting here for a bit while everyone's starting to load long, and then dumping down to that daily 200. But that scenario may not happen, right? It is a bull flag, and I am just talking about losing that flag first, because should we hold up these 4-hour squeeze bottoms, these daily moving averages start to push through the tops with some bullish intent, we could get through this 4,200 finally and start to move up to the next zone of resistance from the highs of last August, 43.27. And, we're about to enter summer. Look how summer went last year. We should always be looking left on our charts to understand what's going on price action wise. Last summer, we had a little dip for June, found some support, took off for the rest of summer up to the high from that bullish drive of last year, right? That we have not gotten back to test. So we are about to enter summer, and we're pulling up on that high. We could easily hold up, or maybe even in the start of June, if we stay here for the next couple of weeks, we could see the dip to the daily 200 to start June, and then a rally up to get through this high. We do have OPEX this week, but next month is a quad witch. And if we get on, there we go. You could say that quad witch, this contract change, is part of why we sold off in June and then took off, right? We could get a similar sell-off at the beginning, or the first half of June into that quad witch to the daily 200, establish a higher low again, and then have a strong summer. Just all cyclical patterns that we should be prepared for. But enough of the macro view. If we just zoom into where we are, it's very clear where resistance sits, right? All of these wicks are telling you sellers are sitting there, and they've been, trying their hardest to sell us off again, but it's just not taken quite yet. So overall, let's see if this 4100, 4120 can continue to be support and push us up into this 4180, 4200, which has been strong resistance, and if we can start to push through. That would also mean, let me move back over to my main chart, getting back up to this daily squeeze top, trying to push against it to fire to the upside. But overall, we are in consolidation. We even have a 2-day squeeze outside. Oh, and look at that. At the bottom of the 2-day squeeze is the daily 200. This just further solidifies the point that I'm trying to make, that we could have a sell-off going into that June quad witch right down to the 2-day squeeze bottom at that 4,000 at that daily 200. If we look again at last year, when we were making these kinds of drops and pops so dramatically, we weren't sitting still long enough for daily squeezes to really set in when we were finding support, right? Now, we've gone sideways long enough that a huge daily and 2-day squeeze is around us, so that if we have another drop, everyone gets really giddy to bearish, right? And everyone's wanting to short it back down to 3,500. We can very easily just hold 4,000, 2-day squeeze bottom, give the look like we're going to break down, and pop right back up. So, enough of the macro view. Overall, for today, we have our range from last week. We have our 4-hour squeeze around us. We're in a very strong uptrend overnight. I wouldn't be surprised to see this possibly give out into open, before open, sorry, as the morning progresses. And wouldn't be surprised for us to come back and tag something like the daily 8. We did close back at all those daily moving averages, and now we're having a nice gap over them. So today, we want to look for these moving averages to be, these daily moving averages to be support, and our VWAP right now is sitting right at the daily 8. So looking for that to hold today. At the very worst, one more dip to 41.36, where POC sits and holding up there. Because as you can see, all of last week, before the data hit, we were holding above the daily 21 and that 4136 POC. And then when we got our data drops, we would get through it, but come back to it. So overall, looking for that to be support and establish a significant higher low coming into this week. Otherwise, we're going to do more of this range oscillation, let's call it. It is an OPEX week. And, you could say that potentially last week they've balanced, right? A tight range like this and just going from 4-hour top to bottom, it's something we would expect on an OPEX week. But being that they did it last week around that economic data, they could have pretty much balanced and are ready to start to push. So we want to at least play the scenario in case that happens. We have seen OPEX weeks where we actually do get a little bit of a trend rather than just sideways. And we can see that into June, we are actually pushing up and getting a little bit above this 4,200. Basically, they want to take it a little higher before that June quad witch reset that it was talking about before. So let's see if this week we can actually hold up above the middle of the range and start to push and fire this 4-hour squeeze to the upside. Or if we're going to start to lose the middle of the range, hug the bottom, and maybe the sell-off starts. Either way, we've got our key levels. Our daily moving averages are all stacked in the middle of this 4-hour squeeze. And we're having a nice gap up. Let's see if they've had enough of selling. If you look last week, kind of a double bottom around that 4110, 4115 zone. So let's see if we can continue to set a higher low and then start to push to the top of the squeeze. We've spent enough time testing the bottom of the squeeze. I think it's about time to test the top. Moving on, let's get to NQ. And obviously, like I've been saying, upside targets ultimately 4180 and 4200 up at the top of the 4-hour squeeze. I'm not going to call out like every single key level. I do have plenty. Oh, I'm on MES. Look at that. It's because I was answering a question for somebody on MES like late in the day on Friday. Yeah, this is what I was going to do. Basically, I can call out plenty of levels, right? Got a zone around 4156. Look, we just ran into it. Started to pull back a little bit. 4156, 4165, 4180, 4183, 4190, There's plenty of levels. And we pretty much tested everything last week. So let's see if we've done enough selling and if we can hold up that new high or hold up that higher low around 4136 and start to depart this range and get up to that 4180. We'll move on to NQ. NQ definitely looking different, right? Higher lows, kind of a channel moving up and pushing against this daily squeeze top, trying to get it to fire. We do have a 2-day squeeze top to contend with as well, which spans all the way up to 13,700. So we're not out of the woods yet at all as far as potential resistance on NQ. But overall, last week, established basically the weekly low around 13,200, and on Friday held up around 13,300. So we've got our higher lows coming into this week. The daily 8 sits around 13,350. Let me just zoom on in here. So just like I said on ES, a pullback to the daily 8 around that 41.36, totally fine by me. But so similarly over here on NQ, we have the daily 8 around that 13.350. So I would still be okay with a pullback to that Monday or Tuesday of this week. And as long as we can hold there and establish yet another higher low, we could see a nice push on NQ to get through last week's high around 13,500 and maybe start to push to that 13,700. You have key levels on the way up. We're pulling up to this 13,450. Let's see, it could be some resistance that gives us a little pullback today. But if we can get through that 13,450, then it's play up to that 500, 525, 541, and 570. But if we roll over and start to lose 1375, then it'll be down to 1350 where the daily 8 sits. Should we lose that, it'll be down to Friday's lows around 13,300. And the bottom of the 4-hour squeeze sits down near 13,275. The daily 21 near 13,230. So we do have targets to the downside. We did not quite get to the daily 21 last week. So if we do see some selling Monday, Tuesday to balance back and find the buyers, we could see a dip down to that daily 21, which has caught up to last week's low. Just some targets to think about on NQ. Moving on to Ready. Ready a little different, looking more like a slight down channel, but they keep buying hard at the bottom of the channel. And you could say we are running up to the top of the channel overnight here. Overall, we're back above 1750 on the Ready. So on a pullback today, we'd love to stay above 1750 to show bullish intent. We start to lose 1750. We're going to go back to kind of fill the gap down to 1745, 1740. Maybe even Friday's lows near 1735, where the bottom of a 4-hour squeeze sits. But if we can hold above 1750, maybe we get one of those Monday, Tuesday push, Monday into Tuesday pushes up to the top of the 4-hour squeeze, right? With a 4-hour squeeze like this, looking at the week ahead, we have to think about what are likely scenarios. And I should pull up the economic calendar as well real quick. Let me grab that. We got through FOMC, CPI, PPI. We did not have a huge, brutal sell-off like everyone thought, and we're still sitting up in this range looking like we could take off. So this week, we are kind of light on economic data. It looks like a busy schedule, but, manufacturing data, some Fed speakers, retail data, more manufacturing data, more Fed speakers, home housing data, as every week are jobless claims, and just a bunch of Fed speakers. So not a crazy week as far as economic data goes. I'd say, maybe the big one that some people will be watching on Friday is like Powell and Bernanke are going to be on a panel together. So either way, just saying, kind of a light week. No huge indicators, no GDP, nothing really tying to inflation. So we could have some fun. And we could see one of those Monday, Tuesday pushes up to the top of the 4-hour squeeze. So overall, on Ready, if we can hold up that 1750, we want to play up through the daily 21, 1765, up to the daily 50 at 1780 at the top of the 4-hour squeeze. Lose 1750, then it's down to the bottom of the 4-hour squeeze near 1730. Moving on to YM. YM, similar to Ready, and a little bit of this down channel, but YM has held the daily squeeze bottom and the daily 50. We're back above it. On Friday, we did get below it, tagged the daily squeeze bottom, then closed at the daily 50. So overall, just like the other scenarios, I want to see YM with this gap up, hold 33,300 where the daily 50 sits. We also have kind of the high from Friday afternoon around 33,360. It's a little 60-point range of support from 300 up to 360. Want to see that hold on Monday. And then we can see a good bullish push to the upside, looking to get through 33,500 psych level and the daily 8, then up to 33,600 where the daily 21 sits, then up to the top of the daily squeeze at 33,800. But if we start to lose that zone around 33,360 and 33,300, then you want to play back to the bottom of that daily squeeze to last week's lows near that 33,150, maybe even down to 33,000 big psych level, and that recent low. Just saying, like, you could get anything on a Monday, right? We could reject these daily moving averages, come down, hit this low from a couple of weeks ago, right? Monday and Tuesday, right? And hold, come right back up and be right at this same spot. We are looking like we're going to have a nice strong gap up, and if we can hold, push through. But if we don't hold, we know the scenario. Moving on, Apple. Post earnings, still holding up well above this 171. We held that as the Friday low. So overall, looking for Apple to try to hold that 171 again. We have the bottom of a 4-hour squeeze sitting there. We have the daily 8 around 171.75. So overall, looking for that 75-cent zone to try to hold. Start to lose 171. We want to target this low right after earnings, right back at 169, where the daily 21 has pretty much caught up to. That would be firing the 4-hour squeeze down into the daily 21 to see if it can hold. But as long as we can hold above 171, 171.75, then we can try to make a push up to our big key level above 175. We almost got there last week, fell 50 cents short. So that's the upside target. If we can get through 175, we do have a we do have a 4-hour squeeze from 174.5 up to 175. If we can't get through that, then we want to target up to that third Keltner sitting perfectly at 177.5. Moving on, AMD. Had that negative earnings reaction, but what did it run into? The bottom of a daily and a 2-day squeeze. Made a U-turn around 81 and came right back up near 100. And then faded back for the rest of the week last week to the daily 8 around 94 and held. So overall looking for 94 to continue to be support. We do have the bottom of a 4-hour squeeze sitting there as well, giving us some more confluence that if we can hold 94, then it's a nice, then it's a play up to 96, where the first Keltner sits to the upside, then back up to 100, last week's high, where the second Keltner sits, and if we can get through that, then up to the top of a daily squeeze, which starts around 102, and as soon as my screen wakes back up, why are you freezing on me, Toss? Come on. Yeah, basically past 100. It's 102 and 104, most likely. And, if we start to lose that 94, you want to play back to the daily 21, which sits near 91.5. Daily 50 also sitting there as well. That psych level of 90, where the daily 15 is also sitting. Ooh, there we go. now toss is back. Moving on, Amazon. Oh, we've had that crazy earnings reaction and that dip back down to 101. And a nice guide right back up above 110. Fell back to it on Friday, slipped it just a little, but overall closed above 110. So let's see if Friday's low around 109.3 up to 110, that 70-cent zone of support, can continue to hold on Amazon. If so, we continue to try to push through the top of this daily 2-day squeeze back up to last week's highs near 113. And if we can get through there, then it's a play up to 115 where the third Keltner sits. We start to lose Friday's low around 109.3. The daily 8 sits near 108.2. So that'll be the first target down. And then the daily 21, daily 200, and daily 15 all sit right above 105. Actually above 105.5. So that would be the next target if we do see a larger pullback and start to lose the daily 8 around 108. But Amazon remaining strong. Google. Google. Strong move last week on that AI news. And just sitting up here near third Keltner and trying to push for more. Overall, if we can keep trucking 118, 120, 122. But it is near third Keltner. It might need a little bit of a reset from that news. So if we do roll over and start to lose 116, kind of Friday's low, we'll fire these 30-minute 1-hour squeezes to the downside, and we'll want to play it back to our zone that we got to and took off from, which sits around 113, 113.5. Moving on, Meta. Crazy strong earnings reaction and still holding up above 230. And it was also holding up above 235 for a bit. So overall, 230 to 235 is our current local support. We have the daily 15 around 231. We have a 4-hour squeeze bottom at that 230. We have the daily 8 sitting around 234. And it looks like we might be opening up above that daily 8 at 234. So as long as we can hold above 234, you want to play it up to 240, near last week's highs and that 4-hour squeeze top. If we can get through 240, that post-earnings high near 245 is the next target. 246 I'll just call it 247, where the third Keltner sits, and 250 psych level if we can get a nice push on Meta. But we start to lose that 234 where the daily 8 sits, play it down to 230. The bottom of the 4-hour squeeze, and 227.5 is the daily 21. Microsoft. Great reaction after earnings. As I'm covering all these big tech names that have had great reaction after earnings and they're sitting up near second, third Keltners and whatnot, this is why I've also talked about at the beginning of this prep that we could see another drop out of this flag. Not saying it's today or tomorrow, just from this OPEX, since it is an OPEX week, into the quad witch in June. We want to be ready that big tech, which has been making a push, and had a great reaction after earnings. Those names might need to take a break, need to see some profit taking. They might need to rotate into some other weaker names. Either way, we could see some pullbacks in some bigger names, but I'm not screaming it's time to short anything. We'll start to see the signs, right? We've had this amazing push on Microsoft above 303, a key level, and we've held, and pushed to 313. We start to lose 303, let me start. we lose 305 where the 4-hour squeeze bottom sits, then it's down to 303 where the daily 15 is now caught up to, and then if we lose the 303 key level, it'd be down 300 where the daily 21 sits. That is at least enough of a reset to then make the push to something like 320. But overall, if we can continue to hold above that 4-hour squeeze bottom at 305 and the daily 8 around 307.5, on Microsoft we could see a good push back up to last week's highs near 313. And the 4-hour squeeze top, if we can get through 313, it'll be it'll be a play up to 315. And that third counter to the upside up near 318. Netflix. Let's see, Netflix held well around 315 and its daily squeeze bottom and started this trek back through the daily moving averages and then made a great push up to 340. On Friday, we had a pullback from a pre-market high of 348 and got below 340, actually closing below. Friday's lows around 337.5. So on Netflix, we start to lose 337.5. You want to play it down to 334, where the daily 8 sits, 330, where the daily 21 sits. She could even make a pullback to around 324, 325, where the daily 50 sits. Got a number of targets. Any of them could hold on a pullback, which we are currently in, off of that daily squeeze top. But if we hold up above the daily 8, around 334, 335, we could get back above 340, and then it's a play up to 345, 348, Friday's high, a pre-market high. And then 350, 352.5, where the 2-day squeeze top sits. NVIDIA. A little bit of a downtrend from Wednesday, Thursday, Friday, and had a pullback to 4-hour squeeze bottom around this 282, and the daily 8 around 284. So, looking like we might open in between Friday's lows around 281-ish, and that daily 8 at 284, as long as we can hold above 281, 282, 4-hour squeeze bottom, and start to get through 284, 285, then it's a play back up to last week's highs. I would say first 288, 290, and then 292 last week's high, up at the top of the daily and 2-day squeeze. We can get through 292, then it's 295, 300, but we do have a daily and 2-day squeeze, so it's going to be, pushing against them, take some time, that kind of thing. In our pullback, we start to lose 282, 280, the daily 21 sits near 278. We start to lose that. It'll be the low from a couple of weeks ago, near 273. We lose that 270, and the daily 50 sits around 266.5. Just targets to think about. That's why we track them. QQQ. Like NQ, holding up well above the daily 8 and bounced off it on Friday. Going to be having a gap up. Overall, let's see if we can hold above 324, a 325, since we look like we might open above those. So if we start to get a pullback, let's see if 325 holds. If not, it'll be 324. If that can't hold, it'll be 323, Friday's low, and the daily 8. Should that give out, a sliver of a 4-hour squeeze sits near 322. Should we lose that, the daily 21 sits at 320. But if we can hold up 324, 325, and have a push on Monday or Tuesday of this week, then it'll be a play up to last week's high near 327.5, 328, the top of the 4-hour squeeze, 330, the next big key level up in the top of this daily and 2-day squeeze. SPY. And what the heck, we'll cover SPX real quick. even though SPX doesn't have any after-hours data, so its gaps can be, a thing to contend with, the same structure still applies with daily squeezes and whatnot. We're in a 4-hour squeeze, and we've done a good job last week holding that 4100, slipping it just a little bit. So overall, let's see on SPX if the bottom of the 4-hour squeeze, 4100, 4110, can continue to be support. Daily 21 at 4115. So on a gap up, you want to see if we open near that 4-hour squeeze top, we could have a rejection back to fill the gap at 4125 where the daily 8 sits, and then reverse back up to 4150 where the top of that 4-hour squeeze sits. If we can get through 4150, 4160 where the first Keltner sits, then it's back up to these recent highs near 4180, 4185, 4195, the top of this daily squeeze, yada yada. Should we start to lose 4115, 4110, 4100, then we'll be firing the 4-hour squeeze down into the daily squeeze bottom, where the daily 50 sits near recent lows at 4050. SPY. Oh, we had last week just shopping around between 414 and 410. So overall, on a pullback today, let's see if we can hold the halfway mark at 412. Daily 8 sitting at 4150. We start to lose that, then it's back to the daily 21 at 410 and a half. Back to last week's lows near 409 and the 4-hour squeeze bottom. Should we start to lose that, 408, 406, and 405 where the daily 50 sits at the daily squeeze bottom. But if we can hold up above 410, 412, then it's pushed through 414. Last week's highs, 415, 416, where the 4-hour squeeze top sits. And then it would be a play back up to 418, 420, where the daily squeeze top sits. Tesla. Sorry. Overall, on Tesla, we held our zone. Big key levels, 166, 167.5. Last week, on Monday, Tuesday, in the chat, I talked about, even Wednesday, in prep, I mentioned that there was that zone sitting there. So as we pulled back to that 166.5, 167, I said big money could be waiting to go long right there. And we had great little pushes up to 175. Pulled back to that zone, great push up to 177, pulled back to that zone, and we're likely going to be opening near it. So overall, as long as we continue to hold that zone, they are trying to push higher through sell walls to get back to the daily 50, which sits above at 180. So let's see if we can continue to hold the zone at 166, 167.5. and make that push up to 180. We do have that 4-hour squeeze top at 175. Last week's high, 177. So let's see if this pattern continues and we keep getting up, or we keep trying to make pushes on Tesla up to this daily 8. But if we start to lose that 166, 167.5 zone, we still have support just a hair below that at 164.5, the daily 15, and a 4-hour squeeze bottom. Should we start to lose that, it'd be down to 160, 158, the last zone that we held before coming up here. And moving on to VIX. So, VIX had a push up to 20 in the daily squeeze top, even up to 21. And that quick reversal right back down to 16.5. And of course, like last week, every time we had a sell-off, it was from that 16.5, but back up to 18. And then buyers would step in, VIX would drop back down to 16.5. So this week, if we're going to have, let's say, that Monday, Tuesday push, nice strong drive, we'd likely see VIX continue to reject 18, where the 4-hour squeeze top sits, 17.5 where the daily 21 sits, get back down to that 16.5, and maybe even give that out, get through this 4-hour squeeze bottom, which spans from 16.5 down to 16, 15.65, near recent lows, 15.5. And if, like I said, we get that Monday, Tuesday push this week into squeeze tops just to fade back, we could see VIX get all the way down and test 15 in the daily squeeze bottom. But if we're going to see some selling Monday and Tuesday, we will likely see VIX start to get above 18, make that push back up to 19, 19.5 where the daily squeeze top sits and where the daily 50 sits, and then another push to 20 and 21 where we topped out last week. So that's it for prep today. Hopefully everybody found this helpful. Thank you for tuning in, and we'll see everybody in the chat.